My name is Mike Smith, delighted that you're taking the time to watch this, and what we want to do here is just look in a bit more detail at the trade alert that our members got today in terms of the decision making that went behind the trade. So just let's review first of all the key principles behind decision making. Firstly, it's the market that dictates strategy. So for example, current market situations are not suited directional trading particularly well and maybe more suited to placing spreads. Secondly, it's the chart that dictates the stock, i.e. whether it's suitable or not, the strike price choice, obviously the entry, timing and predetermined exit. And finally, our fundamentals may guide the duration of the trade as to whether it's a 1 month or a 2 month or a 3 month expiry, as well as the strategy itself. So those are the three key principles we use to make decisions. Now let's take that into the context of today and look at our trade of EA. So in terms of where the market is now, we've already determined that a spread strategy is suitable for current market conditions. So now we go to have a look at the chart. And if we look at that chart on our 3 timescales, so daily, weekly, monthly, that we often use for spread positions, we can see the pivot high that EA has broken in yesterday's trading. We also see the green buying volume coming in and the green heat map, which are part of the Hawkeye software that we use to make our decisions. We've just moved into green uptrend, and so this looks set up well. We then, of course, look at our other 2 timeframes to confirm that this is a good entry, and again we see green trend and volume on the weekly and likewise on the monthly. So what they say is we've got a consistency in entry, and we're going to use a bull call spread at 65 to 70 strike prices to enable us to trade this according to market conditions and according to the chart. Now our final decision is of course our predetermined exit strategy. Now it's sort of difficult when a stock is at its high or higher than it's been for a number of years, or in this case an all-time high. So what we have to do in that situation is one of 2 things. We can either use something like an ATR level, which again Hawkeye enables us to do, to say, right, our profit target on this is a 2 ATR. If it moves up, we'll take profit on the spread. Or we can look at the distance between the bottom of the last pivot low and the pivot high. In this case, it's about $3.30, and project that that might be the upside to this. So it may be that we have a stop that's $3.30 above our entry price. Either way, this is a good entry. We've predetermined our exit strategy. We've chosen the right strategy to meet market conditions. And I trust that makes sense in terms of the process that we would go through to determine an entry for our trade alert and portfolio service. We look forward to seeing you again soon.